Hey, good morning, everybody. Today is Thursday, July 16th, 2015. My name is Cliff Backus, and this is your daily video market review. Stocks started higher but closed modestly lower yesterday. Trading volume was mixed, with volume on the NASDAQ coming in slightly below Tuesday's levels, while the New York Stock Exchange volume was higher. The S&P, which has recaptured support at its 50-day moving average, closed lower yesterday on heavier trading volume. Yesterday's close was less than 0.2% below the prior day and didn't meet the minimum distribution requirement. A distribution day is a day when major indexes sell off more than 0.2% on heavier trading volume than the prior trading session. Distribution's a sign of institutional selling, and too many distribution days in a month can be a sign that a market rally's in trouble. That noted, while the large cap S&P 500 didn't record a distribution day yesterday, the mid-cap S&P 400 did. So did the IBD 8585. Declining issues bettered advancers by a 3-2 margin yesterday. The New York Stock Exchange advanced decline line, while looking a little healthier in the past few days, continues to look more bearish than bullish. New highs continued to better new lows by more than 2-1. Our market timing model is showing an aggressive buy signal on the S&P 500 and a margin signal on the NASDAQ. An aggressive buy signal indicates that aggressive traders can begin to accumulate positions. More conservative traders may want to wait for more confirmation of the rally. A margin signal is an aggressive buy signal combined with a buy signal and is our most bullish indication. The O'Neill market model is showing an uptrend under pressure. Our distribution count lost a day on both the NASDAQ and the S&P 500 due to age, and is reasonable for this stage in an uptrend under pressure. Large capitalization stocks outperformed small yesterday for the fourth day in a row, and now have an edge on a 10-day moving average basis. This is more consistent with a market in correction. Our swing timing models indicating a modestly overbought condition in the market. Although we're aggressively bullish at this juncture in the market, we're getting mixed signals from this market. Caution's advised. Bulls should be free to put cash to work here, but be sure to have your stops in place and err on the side of caution. Okay. What we're looking at here is Moody's list of 177 industry groups sorted in HGSI, high growth stock investors, by 5-day percentage price change. The reason we look at this is that by noting where the strength in the market is on a daily basis, we can get an idea of where the power in the market is rotating to. The basic premise of momentum trading, which is what we're doing here, is that we need to identify where the power in the market is and get out in front of it. So let's see where the strength was yesterday. On a 5-day trailing basis, transit services were up 11.6%. Specialty pharmaceuticals were up 9.6%. Biotech was up 9.2%. Airlines were up 7.2%. And factory automation equipment was up 7%. We're still seeing a lot of biotech and pharmaceuticals. We're seeing the airline index begin to reassert itself. We'll want to keep an eye on these areas in the coming days and weeks. Let's look at the Russell 2000. I wanted to start with the Russell 2000 today because you can see that we had this uptrend in the Russell. We violated the uptrend back here at the end of June, and we retested the lower end of that uptrend and blocked yesterday. The Russell 2000 closed right near the bottom of its daily trading range yesterday. It closed at 1264.52. And the fact that we balked at this trend line gives us pause at this point. I'd like to see the Russell 2000 take out that area. We have support for the Russell down here in the 1226 range. Let's take a look at the NASDAQ composite. NASDAQ yesterday was down 5.95 points or 0.12%. It closed right at the bottom of its daily trading range, which is less bullish than bearish. It closed at 5,098. We have finally, it appears, taken out the 5,000 level. We haven't taken it out decisively by any means. We need to take out resistance up here in the 5120 area. That's our area of resistance in the NASDAQ right now. This trend line will be our area of support. And so our support's right around in the 50-50 range. We'll see if the NASDAQ can break out of this area, this consolidation area in the 5120 area. Yesterday, trading volume was below the prior day. For you followers of William O'Neill, we are on an uptrend under pressure. We have 4 distribution days in the market, which is very reasonable for this stage of a uptrend under pressure. Yesterday, we lost this distribution day due to age. After a month or so, distribution really begins to lose its effectiveness. And so after a month, we stop counting it. We are on a margin signal on the NASDAQ composite right now, which is our most bullish rating on the market. Aggressive traders can utilize margin to leverage up their portfolios. More conservative traders can still be investing in this market. Let's take a look at what the S&P 500 is up to. The S&P yesterday was down 1.55 points or 0.07%. Trading volume was higher than the prior day, but because we were down less than 0.2% yesterday, we didn't rise to the minimum level of a distribution day. The S&P closed at 2107 yesterday. As we mentioned, trading volume was higher than the prior day. We are in an uptrend under pressure on the S&P. We have 5 distribution days in the past month. Note that we lost a distribution day yesterday due to age. The S&P right now is bracketed by support down here at this trend line and resistance at this trend line. This trend line is very important because, as you can see, back in May, we put in a high in the market. In June, we put in a low. In late June, we put in a lower high. And then in July, we put in a lower low. And so the S&P 500 right now is in an intermediate term downtrend. We need to take out resistance at this trend line to get out of this intermediate term downtrend. I don't have any stocks that I particularly want to take a look at today, but I do want to call your attention to one stock here. We've been watching Comfort Systems USA, which is a provider of heating, ventilation, air conditioning services to U.S. commercial, industrial, and institutional markets. The stock recently broke out of this downtrend as it's putting in this flat base. This would have been a good place to buy the stock in anticipation of breakout from the base. But yesterday, Comfort USA pulled back to its 50-day moving average and found support there. Aggressive traders may want to pick up a little bit of Comfort Systems USA here on a bounce off of that 50-day moving average. This would be a good point to get into a pretty solid stock. Comfort USA gets a 64% checklist rating and has a pivot point of $23.96. That's about all I have for today. If you want to talk about any of the stocks mentioned today or any of our market strategies, please feel free to give me a call, drop me an email, or make an appointment. Come by the office, see what we're up to. Contact information is on the home page. For daily access to our model portfolios, trade updates, and more up-to-date information on our trading strategies, please take a minute to go to our subscription page and subscribe to Push Button Stock Trading. You can also follow us on Twitter at PushButtonStock. Again, my name is Cliff Backus. That's your daily video market review. Have a safe and profitable day. Keep your stops in place, and I will see you again tomorrow. Please stay tuned for our important disclaimers. All the best. Disclaimers. Push Button Stock Trading Video Market Review is produced and edited by Clifford B. Backus. Mr. Backus is a Senior Vice President of Investments, Technical Analyst, Portfolio Manager, and Partner with the investment firm of Ohanneson LaCours Incorporated. Video Market Review is produced solely for the benefit of our clients, friends, and colleagues. Anything written, stolen, and/or plagiarized in this publication is done without malice. Further, the analysis and opinions expressed in this publication are strictly those of the editor and not of Ohanneson LaCours Incorporated, its affiliates, subsidiaries, or any of the officers or employees of Ohanneson LaCours, Inc. On that note, we submit the following. The analysis, calculations, and evaluations presented herein are based on data and assumptions Ohanneson LaCours Incorporated believes to be accurate. Ohanneson LaCours Incorporated makes no representation that such analysis or calculations are accurate or that such valuations represent levels at which actual trades may occur. This report has been prepared from original sources, except where otherwise noted, and data we believe to be reliable. Ohanneson LaCours, Inc., its affiliates and subsidiaries, and/or their officers and employees or their families may from time to time acquire, hold, or sell a position in the securities mentioned herein. Moreover, opinions may differ from one entity to the next. If we are used in connection with the purchase or sale of any security discussed in this report, we may act as principal for our own account or as agent for both the buyer and the seller. Push Button Stock Trading is dedicated to the education of friends, clients, and paid subscribers. Push Button Stock Trading is an information service only. The information provided herein is not to be construed as an offer to buy or sell stocks of any kind. Push Button Stock Trading is created to aid subscribers in making informed investment decisions based wholly or in part on technical analysis. It's possible that at this time or some subsequent date, the editors of Push Button Stock Trading may own, buy, or sell the investments presented. All investors should consult a qualified professional before making any investment. The information provided has been obtained from sources deemed to be reliable, but it is not guaranteed as to the accuracy or completeness. The editors of Push Button Stock Trading make every effort to provide timely information to subscribers, but cannot guarantee specific delivery times due to factors beyond our control.